Thinking about buying your first home? You're in the right spot. Buying a home is one of the biggest financial decisions you'll make, and it's important to get it right. That's why we're here to break down the process, help avoid common mistakes, and build your confidence as you move forward. I'm Shanna. I've been working with Treadstone and helping home buyers for 13 years and been in the industry for 25 years. And while this video has tons of great information, you'll make the most progress talking directly to a licensed loan officer. You can get in touch with one of our loan officers in the link below. Step 1. Figure out your budget. Let's start with a big one. How much can you actually afford? First, take an honest look at your finances. Saving money for a down payment and closing costs is the first place to start. A lot of people think you need 20% down, but plenty of loan programs actually let you buy with much less, even 0% in some cases. Of course, the more you can put down, the lower monthly payment will be, and you might be able to skip mortgage insurance. Just make sure you don't empty out your bank account in the process. It's smart to keep some savings set aside for those unexpected repairs, moving expenses, or anything else that pops up while you're shopping for homes. Lenders look at something called your debt to income ratio, or DTI, which is just a way of showing how much your income goes towards loans and debt. This figure helps decide how much you can actually borrow. A good rule of thumb: try to keep your monthly house payment under 28% of your gross income, and to aim to keep all of your combined debt under 36%. Some loan programs top out at 43% or 50%, but the lower the better. Here's something else to keep in mind: your credit score. You can request a free credit report each year from any of the major credit bureaus, and it's worth seeing where you stand. Although one of the first things your loan officer does is pull your credit for a pre-approval. If you're in the 700s, that's fantastic, and will usually get you the best interest rate. If your score is lower, especially in the low 600s or 500s, focus on paying down credit card balances and hold off on any new purchases. Your score makes a difference for both your loan options and your interest rate. So a little prep now can pay off later. Connecting with a loan officer sooner rather than later makes things a lot easier. We can sit down with you, take a look at your finances, and help clear up any confusion about what price range fits your lifestyle. Remember, you want a payment that leaves you room to breathe and enjoy your new place, not one that puts stress on your family and finances. Step 2, collect your documents. Once you've got a budget in mind, it's time to round up your paperwork. Doing this ahead of time makes things way smoother down the road. A few things your loan officer will ask for: pay stubs from the last month, W-2s from the last 2 years, copy of your driver's license or government ID, federal tax returns, all pages, for the last 2 years, official bank statements for the past 2 months, checking, savings, and any retirement accounts are helpful. If your situation is a little different, maybe you work for yourself, have income that changes with the seasons, or earn commission, just be ready to pull together some extra paperwork. Every loan is unique, so your loan officer might need a few more things as you move through the process. Step 3, get approved for a mortgage. The pre-approval is where things get a little bit more serious. With a licensed loan officer, you'll fill out an application either online, over the phone, or in the office. They'll take a look at your income, assets, and credit, which usually takes less than 24 hours. If everything checks out, you'll get a pre-approval letter that states your maximum purchase price. Sellers, especially here in West Michigan, appreciate a strong pre-approval, particularly from a respected local lender like Treadstone. It's important to note, a pre-qualification and a pre-approval are not the same thing. A pre-approval includes credit and income verification, while a pre-qualification doesn't have any of that. That is what makes a pre-approval so much more valuable for home sellers, making your offer almost as good as a competing full cash offer. Step 4, start house hunting. All right, here comes the fun part: touring homes. Your first step is to team up with a real estate agent who knows the area. Local agents have a great read on the market and can quickly point you towards homes that check your boxes. If you're not sure where to start, ask your loan officer for suggestions. We chat with awesome agents all the time and would be happy to help you connect with someone who fits you. Here's some good news: realtor fees are usually paid by the seller, not you. That means you'll get all the help and know-how of an experienced real estate agent for free and without taking on extra cost yourself. Honestly, if you're buying a first home, working with a great agent is a must. Make a list of all of your wants and needs and share it with your agent. They're there to help you find the best fit. As you're walking through homes, try not to let surface dust distract you. Paint colors can always change, but pay attention to the bigger ticket items like roof, furnace, windows, and foundation. Those things can be really important and impact your budget later on. Jot down some notes on each house so you can remember what stood out or didn't when you're comparing options later. Lean on your agent's advice and ask anything that's on your mind. No question is too small when you're making a big purchase like this. Everyone's house hunt is different. Some people find their perfect place right away, while others need weeks or even months to land the perfect fit. It really comes down to how many homes you're able to tour and how soon you want to make an offer. Try not to rush the process. Step 5, making an offer. Once you find the home you want, your agent will walk you through making an offer. They'll help you figure out a fair price, how much to put down for a deposit, how to handle private inspections, and a timeline to close. Your agent's got your back here. They handle any negotiations if the seller counters. You won't have to deal with it all by yourself. Back a little bit of back and forth here. It's totally normal for sellers to come back with counter offers, so don't let it throw you off. You'll want to move fast when making an offer since homes can get snapped up quickly. This whole part usually wraps up in a day or two, maybe longer during slow markets. Step 6, offer accepted. If your offer gets accepted, then congrats. The seller said yes to you, but here are still a few important steps and several days of formalities before anything is official. Once your offer is accepted, things move into what's called processing and underwriting phase with your lender. Your processor, another professional who works closely with your loan officer, will likely touch base with you to collect any updated paperwork or documents. Now's when the home inspection typically comes into play. Your agent can help schedule this. A professional inspector will check out the house from top to bottom and hand you a detailed report. This is great for peace of mind, knowing you're buying a house in excellent shape. But in the off chance that the inspector finds something dire, you can use that knowledge to renegotiate or back out of the deal. Next comes the home appraisal, which your lender will order. This just makes sure the house's value lines up with your purchase price. Meanwhile, the lender coordinates with a local title company to confirm there are no surprises about claims of ownership and that the seller does, in fact, have the right to sell their house. Big tip here, hold off on any big changes during this stage. Don't take on any new debt or switch jobs. Even buying a new couch for your new home can really affect the mortgage approval more than you'd think. While all of this is happening, your loan goes to underwriting for a final review. As soon as everything checks out, you'll get a call or an email saying you're clear to close, which means the finish line is in sight. From inspections to appraisals to the underwriting review and title work, expect this chunk of the process to take about a week or two. If there are any hiccups, like extra paperwork, renegotiations needed, it might stretch out to 3 or 4 weeks, but hang in there. Step 7, close on your home. Once you get your clear to close, you'll be asked to pay your down payment and closing cost. Most folks use a cashier's check or wire transfer for this part. It's pretty straightforward and your lender will have detailed instructions here. You'll set up your closing appointment with your lender and agent together. Most often, you'll meet at your local title company's office, but occasionally it might happen at your real estate agent's office. At closing, you'll sit down and go through a stack of paperwork. You'll sign the initial, sometimes dozens of paperwork to confirm the financing, ownership transfer, and more. Depending on the timeline created by your real estate agent, you may or may not get your keys immediately following this closing appointment. Sometimes it's delayed by 30 or 60 days. Either way, once the paperwork is signed and the funds are in, the home is yours. And that's how you buy a home, start to finish. It might seem like a lot of steps, but it's a journey you don't have to take alone. Having a knowledgeable and local lender in your corner makes all the difference during the home buying process. Whether you have questions now or later, reach out. We're always available at Treadstone. We'll see you in the next one.